Hello everybody, I'm the Boss Hog, otherwise known as Liam, and let's have a look at the stocks I bought this week. Boy is it a spicy one. Okay, so this is only my second week doing this, but we're actually going to start with the summary this week. I realise some people just want to do a quick flying visit to spy, see what's up, see how crazy I've been, or how many mistakes I've made. So let's do the summary first, and then if anybody's interested, then there are details on the following few minutes, as well as a nice quote from Warren Buffett at the end to give us something to think about. Okay, so 5 positions that I've opened this week, all of them SPACs. We've got DMYD Technology, went in largest on them, deposited about £800 this week, which is the plan moving forward every week into 2 separate ISAs, which are like IRAs for any Americans. So yeah, £240 of that went into DMYD Technologies, £100 into PAVM, £160 into Switchback Energy. I have actually owned Switchback before. Sold out at $44.80, took a couple of £100 profit. I'm getting back in because I said if it ever went below $37 again, I would. It was actually difficult for me to buy the share this morning, so it took a little while, and I eventually got a buy price of $37.32. It's not quite the discount and the bargain that I was hoping for, but I'm still happy to own the stock anyway. Then we've got DMTK, super happy with that one as well, in at £150. And then what's currently just a pool of money at the moment in IPOF. But again, there is a reason to be owning that. Put £136 in that, and we'll go into details as to why. So if you want to see more, then let's have a look at the reasons. But before we move on, please like, and to keep up to date with all my content, consider subscribing. Each like means money toward our charities and Tiddlywinkles, who help over 12,000 animals, including hedgehogs, every year. Here's a picture of my pet hedgehog, Euclid. He doesn't need any help, but he looks damn awesome anyway. So the approach I'm taking this week has 3 aims. The first is to add some more risk to the portfolio. It's currently way too safe. I started investing in December, and I think I was more focused on capital preservation, taking a few risks, maybe establish some credibility with myself and my wife, maybe gain some confidence in it as well. But I realised I just haven't been as adventurous as I'd like to be. This is a simplified table of my investments as they stand, I guess a couple of days ago now. It's a simplified beta effectively, where the level of risk is 1 to 5, 1 being the safest. You're talking bond-like stocks, utilities, that sort of thing. 5 is anything which is, on the verge of going bankrupt, or SPACs, or unproven technology, or business, or etc. Level 3 are your standard sort of J&Js, JPM, solid, reliable, good companies. 4, it's a bit of a mixed bag. I've got Alibaba in there, anything sort of geopolitical concerns, got some recovery stocks, some stocks that have seen better days. Maybe the business itself is proven, but it's fallen on hard times in some way. That's level 4. And level 2 is mostly AT&T. You could argue that should be in 1, but I think the HBO angle is slightly underplayed, so I've put it into more of a 2 than a dull 1. Continue to feel that. But you can see here my level 5, which is where SPACs are going to go, very small part of my portfolio, and this is against the self-imposed aim of having 5% in riskier. So the medium-term aim will be putting 5% of my portfolio value into risk 5, and that's what we're starting to address this week. We also want to have a look at some more capital growth stocks. I'm only 33 years old. There's time to worry about dividends in a few decades. For now, though, too many of my stocks are dividends effectively, and I want to target some capital growth, even if that means putting some capital at risk in these high-risk plays. And lastly, it's just to create some good energy in some Discord and Reddit chat rooms. The community is good for the soul. Some of the community has been doing great. I'm slightly envious, but also it's just good to be in it together, kind of bring a bit of community to investing as well. So those are the 3 approaches we're going for this week. Okay, so a bit more detail about the shares, the SPACs that I bought into. The first one is going to be DMYD Technology. This is going to be merging with Genius Sports. Really, for me, it's a super easy to understand business, touches on multiple areas that are of interest to me, and by that I mean sports, big data. I'm an analyst by profession, and gambling. Man, I love poker. Some of my original investment into the stock market is from a poker pot that I decided to invest because all the casinos are closed at the moment. So really bringing that together, I totally get the business perspective and what it's trying to bring to the market. Its reason for being is to gather data from live events and sell it to bookies, not just bookies in fairness, sort of other analysts, media firms, or anyone who's interested in buying sports data. Actually, it might be a SPAC, but it's got really great numbers in Genius Sports itself. It's got really great revenue growth. It's a market leader if you read their information. It's got multiple marquee leagues, really appeals, very established, and it's got some great long-term revenue committed as well. It's in the high 60s in terms of its future revenue percentages. So it looks really good from my perspective. And like I say, I kind of like the idea of a big data play, and that's why I put 250 quid in it as my biggest SPAC that we purchased. Okay, next we've got PAVM, ticker reference there as well. To me, this is also kind of simple enough to get your head around, even if you don't understand the medical details, which, to be fair, I don't. But really, it's an improved medical technology or procedure to improve carpal tunnel, and the main benefit is the improvements in recovery times, a week basically. I'm not medical, but I look for people who are either buying it already. This warmed me because it recently treated its first US patient, went very well. Everyone was giving it glowing reports basically, so we were always a bit worried about Theranos version 2, but this makes me feel good. So yeah, opened a position in PAVM as well. Okay, on to number 3. Okay, so we're on to number 3, and next up we do have Switchback Energy Acquisition, ticker symbol there, SBE. Like I said, I've owned this stock before. I think it's a fine stock. It's a simple objective. It's a play in the EV world where, in fairness, everything is expensive, including this, but you know, I do want exposure. It makes a lot of sense to me. It's a hugely dominant player in this sector at the moment. It also expects to be well capitalized once the merger goes through. Lots of capital until the end of 2023. It probably will need another injection of cash, to be perfectly honest with you, but EBITDA is expected to be positive from 2024. So, I mean, it is a fairly long-term investment for me, unless I see the opportunity to get out, but this may well be a chance for me to open a longer term position. Interestingly, I actually sold the stake I did have in this to open a position in Alibaba when Jack Ma went missing. That's also been a profitable investment, so I'm not too sad that I did it. I didn't have any additional funds at the time, and now I do. It's a chance for me to get back into SBE, so looking forward to that as well. And after then we have DMTK. I hadn't actually heard of this before somebody mentioned it in Discord. If I'm perfectly frank here, there's some medical stuff I don't really understand, genetics and all that good stuff. What I was most cheered about was the deals it's been rolling across parts of America, in Texas, Illinois, and California with the Blue Cross group. It also had its inclusion in the Cancer Network guidelines, some sort of official documentation that allows it to go forth, skin cancer specifically. My sister has also had skin cancer, so I suppose it resonated from that perspective. Everyone seems quite excited about it. From my perspective, it's some fancy medical stuff. Seems legit, so I'm opening up a position in it. On to number 5. Okay, and here is number 5. It's the Social Capital Header Sophia, number 6. This is unashamedly a play on Chamath and more widely his management team. The reason why this is called number 6 is because there's been 5 of them already. 4 of them have been wildly successful. Even though it hasn't yet announced a target, the shares are trading at sort of $14 and the $14.50, and that 45% premium is all about the individuals involved. I have no problem at all throwing money at people who seem to reliably deliver. It's not a huge opening, but again, it's something I'm looking forward to. I'm not a technology expert either, but I like the kind of companies that this fund is going to be targeting, so it was a chance for me just to get involved. And actually, doing some due diligence on this, I realized that the original version 1 of this fund under IPOA actually became SPCE, or Virgin Galactic, where I have a modest size holding, a couple of hundred, which has then more than doubled in value since I took a stake. So that was nice actually to know that I've already in essence invested in version 1. But this is for sure a play on the individual and the support team. And because stonks, honestly, I just needed a fifth, or felt like I needed a fifth company, and this kind of was a bit of a gamble. I've got no idea who they're going to merge with. Hopefully, it will just be a bit of fun when it does happen. Okay, so that is the end of those. Any comments? You disagree? You agree? Maybe I've not considered a SPAC that you're really big on. Feel free to put it in the comments section. And thank you very much for sticking with the video this far. And as promised, a quote from our investment guru, Warren Buffett. If you don't find a way to make money while you sleep, you'll work until you die. Honestly, this is pretty thought-provoking for me. The first time I heard it, I really spent, I don't know, a couple of minutes thinking about it. I'd been feeling quite tired at work, been working on a project that had been consuming a lot of hours, and I realized that I needed to do something about that. So this was one of a few things that really started my investment journey. So yeah, food for thought. Thank you very much for watching, everyone, and until next time. Bye.